settling in from the economic disruption of COVID-19, where will the attention of investors and venture capitalists shift towards? Now, which industries and upcoming trends are to watch for in 2022 and 2023? I do not have the answers definitely, but these experts do. Calling upon Mohan Bilani, co-founder and CEO of E27, and joining him on the panel is Jeffrey Paine, co-founder and managing partner of Golden Gate Ventures, and Carmen Yuan, general partner of Vertex Virtues, Southeast Asia and India. Over to you, please.
Okay, thank you very much. It's really good to be here. It's my first ever physical Wow Digital event. It is nice to be not having Zoom sessions and discussions. So I'm joined today by Jeffrey and Carmen, and we've got the topic today, right, all about investment. So let's jump in really quick because it's a very short session. So maybe Jeffrey and Carmen. Carmen first, can you please introduce yourselves a bit more about your fund?
Yeah, hi everybody. It's very good to be back in the Wild Digital. I remember the last time when I walked here, so I was sharing with Mohan, I felt like I'm just walking back into history. Same feel and equally crowded. So very good to be here. I'm Carmen. I'm with a fund called Vertex Ventures. We're one of the more experienced or older fund in this region, and we manage about $1 billion of capital under management. In total, we have done 4 funds. We are investing out of our 4th fund, and we invest in Southeast Asia and India, generally early stage.
Great, thanks, Carmen. Jeffrey?
Hi, thank you for having me. First time. Interesting, first time. But yeah, a lot of familiar faces. So my name's Jeffrey. I'm from Singapore. I'm a quarter British, 3/4 Chinese, and according to my wife, I'm half Malaysian because she's Malaysian. So I don't know how the math works. But my fund is Golden Gate Ventures. We started in 2011, I guess based in Singapore, and then invest in Southeast Asia, pretty much anything below Series A, right? So any from 100K to 3 million. So now we have 4 funds, and we are still investing in Southeast Asia. We have 3 offices, 18 people. So yeah, so that's me.
Great. So, okay, for questions, right, I know there are 2 mics over here, but feel free to jump in and ask questions midway. Don't be shy. I'm very happy to refer to your questions and jump away from my list. So we have 33 minutes now, so let's get kicking. Okay, so give us a sense for both of your funds, right? I mean, we are in a tricky, uncertain kind of period. So what are your fund thinking, like what are you all thinking in terms of investments right now? Are you all actively deploying capital? Is there like a wait and see kind of feel internally? And how do you think things are going to change in the next maybe 6 months ahead? Maybe Carmen, you kick off first.
Sure. So we are always investing. So the purpose of our existence is to invest so that we can grow companies and exit them, and the cycle repeats, right? So for us, we have got capital to deploy. So we do have a 4-year investment cycle. So our 4th year will be sometime next year. But we think that going at the pace, because we are seeing good companies, we'll probably invest by end of Q1 next year. And therefore, we are actually in the midst of fundraising for 5th fund. And by which time we'll probably start deploying in Q2 next year. So always investing.
Okay, so to clarify, right, y'all are kind of still waiting and seeing in some sense, or y'all are actually really looking at deals even happening in Q3, Q4?
Yeah, so we are looking at deals actively. But it's just that the whole deal making doesn't happen in 2 weeks. So last year was a crazy year. Last year, I was told, oh, in 2 weeks' time, we plan to close the fundraising. It's not about getting term sheet, it's about closing. So we don't do that. So the whole journey takes a while. So we think that by the time we finish investing, it'll probably be Q1 next year. So we are very good. And if it spills over, no worries, we've got Fund 5. So it doesn't matter which fund. Yeah.
Okay. Jeff, same or different?
Yeah, we've always been investing. So let's see. Fund 4 have started investing last November, and then Fund 3, yeah, so we've been investing. But I think your question is a little bit weird for me because we have actually stopped investing a lot since April last year. So April till now, we've done probably about 5 deals, like 2 small A's and 3 seed deals. Yeah, so if your question is what's happening now, actually, we already know this is going to come, so hence we kind of stopped last year.
Okay, so can we go a bit deeper, right? You said you already know this is going to come. So are you in the wait and see kind of phase? Is it because what you are not seeing good enough deals? I mean, or are you just completely waiting for the right time, right, or better market conditions?
Yeah, so I think as a fund, it's constant looking, right? So our funnel needs to be at the very least 99%. I need to see almost 99% of all the deals. And usually because of what we do, how we do things, from using data science and research, we already say no to you before you come to me. Understand? Maybe you all don't understand. So 70-80% of our deals are outbound, right? We don't react to deals because we already know we don't want you. Sorry, but a bit like. So that's what we do. As a fund manager, that's what we do. Okay, 99% we say no. So that's our job. Right? We say yes or no on a daily basis. So since last year, it was a little bit. I think the bubble started in 2019 actually. Then we were kind of a little bit caught, right? And then 2020 was a distraction, and then a bit of an excuse. And 2021, the excuse kind of went longer. But 2021 was a very, very good year, as all of you know, right? But it was a little bit insane from February to April. We were kind of like, we have to kind of be a bit more disciplined.
Okay, so on the correction side, right? Are you all expecting to see corrections in the seed to Series A valuations, or do you think the corrections is only for late stage companies? I mean, late stage we've seen significant amount of corrections, like Klarna being the most, I think, more well-known one. Is the same thing apply to seed and Series A, or?
Yeah. So last year, end of last year, what happened was a massive market correction of the public market. So it trickled down to the later stage companies where they started to see massive haircut. And it trickled down one step further to like the later stage, growth stage, like Series C, so on. They also started to see that the valuation was adjusted and it comes down, right? But honestly, all this shouldn't even have to happen in the first place. So like what Jeff says, 2019, but probably for me, the effect was actually second half of 2020. Initially, 2020 everybody was all shut down. And just like what I'm seeing now for the airports, it's been so crowded. So the moment COVID seemed to have some semblance of vaccination and people are feeling a little bit cheery, suddenly all the money went into investments. And as a result, 2020 second half became a year when we started to see a lot of investments going in, and it continued into 2021. So it was without good reasons, right? Because everybody was still working from home. Spending was held back, but nobody was traveling. So it's different. The amount of spending is different. And so by the time it builds up to the end of last year, the correction happened. But if you think about it, it shouldn't even have happened in the first place if everybody were more logical in terms of how they did the valuation and how they look at companies' performance, etc. Yeah.
So your point is that the seed and Series A side, are there still going to continue to be corrections?
So
or not?
it is being corrected. We see that there has been correction, probably more moderate now. I would say that the valuation is probably okay, but is there room to be a little bit more aggressive for us? I think so, yes.
Okay. Jeff, your side?
I think the growth stage, so those of you who are raising growth stage, is a bit challenging, right? So the crossover funds have stopped. But the good silver lining is Chinese funds are here, right? But Chinese funds also very smart. They go earlier, right? Because they know the later stage is a bit whacked, right? So then if you raise seed is okay, but it will take you longer. Then the undisciplined investors will give you all the valuation that you want, right? Because we really don't have a massive correction so far, so most people are still hanging on. So I think seed Series A will still be okay, maybe 30-40% down. Seed will be better, right? Because the undisciplined ones will say, you have money for 3 years, we will be out of this thing, right? So they are a bit irrational also. So I think seed, you're okay, but generally just you would probably take longer than you think.
Okay. And in your view, what needs to be done, or what needs to happen, right, for the situation to be better, right? Like, to put it bluntly, right, does the war need to end and then suddenly Southeast Asia will be a better state, or do you think at some point people will automatically say, hey, look, we just need to stop and just start, like everything just needs to go back to normal fast?
So the world is progressing forward. Hence, the word innovation will continue to need to happen, right? In good times and bad times, innovation must continue to happen. So at the stage that we are in, we're talking about being in seed stage, in Series A, depending on how you define Series A to Series B to C, right? The whole continuum will continue to need funding. Now, the question is, what are we innovating? Are we innovating things that's relatively incremental? Therefore, when people stop spending, we see an existential crisis. Or are we looking at things that it takes a little bit of time, but it's really addressing a big point, a big problem in the workflow, let's say. And that means that if we're able to find niches, find real good users, then we can continue to sustain ourselves, right? So for me, at that early stage, if you're really playing the innovation game, you should still be able to find funding. The question then is back to you as founders or back to us as investors. How generous are we? And for the founders, how ambitious are you? Are you logical? Are you ambitious? Are you aggressive? Yeah, you should be able to find funding.
Okay, Jeff, you answered the question, but 1 minute, I'm curious. How many founders in the room? Can you all raise your hand? Founders?
About 1/3, right?
1/3, right? And then how many investors? Then the rest of you?
They are normal.
Government.
So the rest are abnormal.
Oh, okay.
2/3 are abnormal.
Okay, Jeff, your turn. What needs to happen to get for the situation to get better?
Situation, what situation? Like
In general investment situation. Is it a macro issue? Is it a macro issue, or is it more like just a time issue, right? For people to get comfortable with uncertainty.
So you have the US macro issue, you have the investors of funds issue, right? Like, do they want to deploy to Southeast Asia issue? And then there is the overall discipline issue, meaning, am I investing in the right thing at the right price, right? So there's two parts. One is the overall thing. So I think you start from micro, right? You look at Malaysia, is it impacted? Then from there, you roughly know, right? And then from there, the funders and the funder of funders, right? Are there issues on their side also? Then you know the overall health. But generally, new ventures are important to any country, right? Especially emerging countries. So there's nothing wrong. The problem, there's a lot more problems to startups, right? Number one, 99% of you shouldn't raise VC money, right? This one you all don't know, right? Then 99% think you're the 1% that wants to raise VC money, right? 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 And then if you ask everybody here, like 80% of founders will think they're 1%, right? But it's mathematically impossible, right? Then the other problem is the investors think the same way, right? Then things happen. Yeah. So there are actually more fundamental problems with the startups, actually.
You mentioned a few things earlier, the macro issue, then second thing, whether Southeast Asia as an investment thesis makes sense, right? Both of you, interestingly, VCs are always raising, but you're doing your Fund 5, if I remember correctly, and Fund 4, right? Do you still need to sell the Southeast Asia story?
Big time. Big time. So for us, so what is happening in the US, in Russia, in a big part of Asia, all good for us. Why? Because there has to be a readjustment in terms of where the capital is to be deployed for the investors of funds, right? And they will conveniently think about US and not Latin America, if not then Europe. But all this have got challenges in and of itself. India was one time a question mark for them, and then now India we start to see companies having exits in local markets. Hence now the capital flow is also into India. What about Southeast Asia? We are one confusing region for all of them because they say that there's 10 countries rolled into one, culture confusing, everything confusing. So for us, we do need to find a solution, or you need to be the best in class for our region so that we as investors, we can have good exits, and this comes back to your valuation, right? If your valuation is decent enough, we can make money. Then when we can make money, we can go back to investors for more money. Then you will have Southeast Asia as a good enough region for why investors should look at funds like ours for this region. So yeah, there is an ecosystem that there's an equilibrium that needs to happen for us.
Jeff?
Well, can of worms. Let me try. Investors are looking here primarily because of the Chinese issue, right? So they pull out money there. India is okay, but it's overpriced, right? US is competitive, but there will always be allocation there. Europe is kind of flat, sometimes up and down. Latin America has good opportunity, but the governments there are a bit, yeah. So so they are a little bit careful. Then Southeast Asia seems to be quite stable, right? Even though some countries doesn't look that way, but they are. But then the fundamental question is usually they don't understand Southeast Asia very well. They don't know that there's 10 countries. They don't know that every country has different timing, right? Some countries are what we call flyover countries. We don't care, right? So it's a bit challenging. Even the Chinese investors ask me, how do I invest here? And they've been doing it for 5 years. They still don't know, right? So imagine everybody else that's looking here. So I think it's still challenging trying to sell Southeast Asia. But the more you guys do what you do, the more there's success, the more local IPOs are happening, the more things are working, should be fine. Yeah, but the problem, like Kamal was saying, entry valuation makes sense, but the reason why we exist is because the exit valuation is the most important thing, right? So one thing is don't celebrate when you raise money. You celebrate with your team, right? And then you stop. Because once you raise money, you're in trouble, understand? Because you have to return a lot of money back, right? So just be aware, because when we look at something, there is a certain target we're looking at, right? So that's why 99% of you shouldn't raise money from us.
Hey, so yeah, I was just going to say, please don't be shy and ask questions. So someone just...
You want to ask? Go.
Yeah. So please ask questions, all right? I still have a lot, but I'm very happy to hear...
Malaysia, my second home, so I
yes, come.
bought up already.
Yeah.
I believe you recently opened an office in Vietnam.
Yes.
Do you see that as maybe the next, from Indonesia to Vietnam, where more of the money is going?
Okay. Let me repeat the question for everyone. Jeff recently opened an office in Vietnam. Is like Vietnam the new Indonesia potentially, correct? Okay, Jeff.
Yes. So I think our associate sitting right here in front. So you want to talk to her? You can ask her questions. Yes. So generally, for the last 11 years, it has always been Singapore, Indonesia, Vietnam as the main push of certain companies. And obviously, due to China, Vietnam has changed a lot. The government kind of fairly know what they're doing. So there's some growth there, but at the end of the day, there are still 100 million people, right? So we have to be really, really careful also when we invest. But there's definite potential there, yes.
Okay, great. Sectors, can we look at sectors now? So I remember at least for GGB, Fund 1, sector focus was on marketplace and consumer.
Fintech.
Right, fintech, right? I'm not too familiar with yours, right, for Vertex, right? But in your view, right, which are the hot sectors? Which are the ones that have growth opportunities that, like, maybe founders that are thinking of starting new companies or thinking of which areas to go, or even those that are thinking of leaving, corporates or growth stage startups, right? Like, which one's got potential? Which one got growth from your view over the next 5 years?
Yeah, so we have got 5 areas that we look at, right? So of course we look at all things B2B. Now you must remember that we have got an India team as well. So the India team, they often see opportunities in the enterprise, SaaS business models. So they're very strong. So inherently, we will have the B2B opportunities. But if we try to make money from the B2B in Southeast Asia, that one a bit hard lah. But anyway, so we have got the B2B. At the same time, India and Southeast Asia, we are talking about almost 2 billion population. So of course, we will have B2C. So B2B and B2C, overlaying it, what do we look for? We look for fintech opportunities, we look at healthcare IT, and we look at what we call sustainability. Now, interestingly, because of the COP26, we are beginning to see more people looking interested into this whole big thing called climate tech. And do we suspect that there will be much opportunities within that? Obviously, we do believe so. But currently what we are seeing is a lot of similar sounding opportunities. People are trying to measure carbon output, carbon input, carbon credit, but all more or less same, right? They all sound about the same. So we will probably have to dive more into opportunities within the climate tech, including electrification, including storage, what have you. But that doesn't mean that all the rest of the opportunities are forgotten. Obviously not. So it's about what are some of the sub-segments we can find within each of these 5 verticals that we look at.
Interesting. Okay, interesting you still mentioned fintech. Okay,
yes.
Jeff?
I think fintech still strong, right? So those who are in fintech, it should be okay, unless you start here, right? Yeah. So when you start here, you are kind of stuck. You're kind of like Singapore, too small, kind of big but not big, small but not small. Yeah.
Wait, so where should they start then? Should they all leave Malaysia and go to Indo? Or?
I'm a bit weird, so let me tell you first.
Yeah.
So the flow of money is quite simple, right? Most of them shoot for Indonesia, right? Then they shoot for Singapore. But then Singapore we are quite confused people, right? We think we can speak Chinese, then we go China, then we kena whack, right? Then we think we can speak English, then we go to the US, we also kena whack, right? Then we cannot speak Malay, we go Indonesia, right? Then come here okay lah, right? Come here okay. But still a bit different, right? So I think we are kind of a bit lost where we should be going. But generally, Singapore teams can start 3-4 countries at the same time, right? Because they have experience working in regional companies, etc. They have some background in that. So what happens is most money goes Indonesia or Singapore plus, right? Singapore plus. The plus is Indo, Singapore, Malaysia, Thailand. These are the 4, right? Vietnam is in a slightly different world. Philippines is slightly behind, couple years, right? So this 4 is the main thing. So if you are already in the 4, right? So if you start a company in Malaysia, target this 4. There's no choice. You cannot just do Malaysia. Why? 99% of you are copycats. By the time you're number 1 in Malaysia, there's 12 copycats in the region. You are too late already, right? That means you raise 1 round, 2 round, 3 round, bo liao, no more, right? Because you're not big enough. So you better break even. If you're still burning money, you're dead, correct? So all these are in my head, so I maybe need to write a paper or something.
Okay, so back to the question on sectors. So you mentioned fintech.
Fintech, agri-tech, right?
Oh, agri-tech. Okay.
I think climate tech is important, and that classifies within deep tech, right? I think deep tech, there's some. Who's deep tech founders here?
Any deep tech founders?
Not a lot, right? See, not a lot. Because it's difficult. It's difficult. But deep tech is another kettle of fish. So if you want to try, go ahead and try, because we want to invest in really, really hard stuff.
Okay, we have about 13 and a half minutes left. So if anybody got any questions to ask, now is really the good time to get to it. Anybody? No? Oh, I thought Malaysia would be better. Yes, one behind, yes.
Come up.
Yeah, just come up to the mic, because then everyone can hear you. The organizer said that there's a lucky draw for everybody who asks questions. Apparently, you can get a free iPad.
Yeah, I was just wondering about which Southeast Asian stock markets the panel thought were attractive and actually can be used as part of an exit strategy. Perhaps they could comment on that. Thank you.
Yeah, so you have already seen GoTo and Buka, right, in Indonesia. So Indonesia does have depth in terms of the public market. But other than Indonesia, we are also seeing a very interesting exit opportunity in the Thai stock market. And again, interestingly, when we were looking at some of the multiples accorded to some of the public counters in Thailand, they were holding very strong, even though the public market in the other parts of the world were like going on a slide, right? So we think that companies that want to list in Thailand is possible. The market is quite strong and deep, and also because there's good enough institutional and retail investors there. So these are 2 markets that are interesting. But because of what is happening in some of our region, so there's actually a good opportunity for Singapore Stock Exchange to now seize the moment and bring back some of the tech companies or tech counters to consider listing on our SGX. Yeah.
Jeff, anything to add?
I second that. These are the 3 bosses that are the most advanced.
Yep, come on, Mike.
Hello. Yeah, so just now Jeff mentioned about deep tech, right, or hard tech. So a lot of, I think Southeast Asian founders, they kind of, in a way, like Jeff said, it's a copycat. Like they take ideas from China and US and bring it here, right? So a lot of fintech, SaaS, this kind of like consumer-based companies. So I'm just wondering, like, how willing is like Golden Gate and Vertex to fund like deep tech, like things like genetic engineering, rocket, like launching satellites, or just making R&D in lithium batteries and stuff like that. So really, really hard tech, where the payoff might take really, really long. Like they might need a larger seed or Series A, and take very, very long to, like longer than usual to go to market or like making like profitable. Like how willing is Golden Gate and Vertex to go into this kind of startups? Because I am really interested in deep tech, because frankly speaking, a lot of startups these days feels like
Okay,
So
sorry, I got 10
solution
more
looking
minutes
for
only.
follow-
So how willing are these two into deep tech, right? Come.
Yeah, okay.
Okay, so while Jeff is getting his answers, and his will be cryptic, for us, we do look at deep tech companies, and we do have at least one company in our portfolio, Hertzwell, which is actually working very closely with autonomous vehicles, being the eyes and the sensors for autonomous vehicles. So we do try to dabble into deep tech. However, I will say that in Southeast Asia, we don't have that depth nor that ecosystem to really power the investors, the talent, the pilot sites, even you will probably need to have manufacturing facilities for some of this. Now, having said that, that doesn't mean we do not, but it's just that it's going to be far and few in between.
Jeff?
I think my first comment is when you start a company, any company is hard, right? Copycat also hard, understand? In fact, copycat is harder because your friend can also start, right? So deep tech, we love, right? The reason is if there's a differentiation, we want to find it. And I think whoever's doing it, right, whether you're a PhD or not, if you want to do it, you should consider doing it because it's usually deep tech companies, you solve larger problems, right? So it's a good thing for the world. But the capitalization strategy is very difficult, okay? Most of us here in the region don't understand how to do deep tech in a very long kind of like multiple cycles, right? We haven't done this for 40 years, not like the Valley does. For example, when the first VC invested in really deep tech companies back in the 60s in the US, right? Their first check, they take 45% of the company because they know you're gonna need a lot of money, right? But then on the founder side, they have no choice because they need money, right? But after many years and many cycles, actually, right now the deep tech companies, VCs don't take 45%, right? It's because the incentive, right? Because after you raise 10 rounds, and then you're left with 2%, then why are you going to keep running your company? A bit weird, right? So I think that the entire capital strategy on how to raise, when to raise, whether research grants, where does government come in, all this is very key. So when you do deep tech, you need to find investors who understand the capital cycle, how to fund you all the way, right? The second problem is deep tech tends to be B2B or B2G, right? And in order to return my money, right, our money, you need to really be top 4 in the world. Number 1, in Malaysia, not big enough. Guarantee you, not big enough. Okay? So then, are you the top 4 in the world, right? So if you look at your tech, look at your IP or patent, the question is, are you the top 4 in the world? Chances are not really, right? But this is what I'm saying, right? So as long as you can figure all this out, then you just start the companies, right? So it's not I'm saying that don't ever do it or you will never succeed, right? It's just that our game here and the game elsewhere in Israel or in anywhere like Beijing or US is very different, right? So you guys have to understand how different we are. That's all. Okay?
Hey, which deep tech companies do you all have in your portfolio now? 1 or 2 that you can mention?
We have one called Spectral, which is a QKD company. So it's a quantum key distribution. I also blur. You all blur. I also blur. So they send security keys from the satellite. Right? So this is B2G kind of business.
Okay. Yeah, I have no idea what you just mentioned, but
Yeah,
okay.
yeah. Quantum mechanics.
Okay, we got a question. Yes, come. I'll try and repeat the question.
My question is, I've got 2 questions. One is on gender lens financing. I'm working
Gender lens
within this
financing.
space. And the second one, I think I'll start with my first question, which is, there's a conception that Asian investors, the VCs, are pretty much replicating the Silicon Valley model. And I want to know from you, what do you think would be the implications of trying to replicate a model of such an advanced ecosystem versus an ecosystem that's failing in this space? And then the second one, it would be gender lens financing, because majority of women that are in that space
Okay, two very important questions. Sorry, my memory is not very good, so let me try and repeat. First part is whether, okay, how much is Southeast Asia replicating Silicon Valley's model, and whether that's even relevant, right, since we are a much earlier ecosystem than them. And second one is on the gender lens, right, with respect to investing in female founders and all that. Great. Thanks. Great question. Thank you.
Yeah, I can go first. So because Silicon Valley is where all started, right? So of course, look, China became what China is today, but that's because they started copying what was in the valley, right? And they have improved on it, innovated on it, and they have become such a powerhouse. Southeast Asia was also a copycat, right? So we also copied from the US. Then we realized that, hey, social commerce, I think China has it more interesting. So we also copied. But if you were to just copy lock, stock, barrel, it will fail flat. So what we did really well, I would say, is that we actually internalized and made it applicable to the Southeast Asia context, given that we have got 10 confusing countries. So I think the leader that managed to copy and localize it, I think that's where they will find themselves to be different. Having said that, we also have got companies that develop solutions for the global market from the onset, from Southeast Asia. So we've got quite a few unicorns that have done something uniquely for the world, started from here. On the gender lens finance, it's interesting that you should ask this question. So when we started in 2010, 2014, that was the first two funds that we initiated, we had done only 5 female-backed investments, so female as co-founders. But given the years and the amount of investments that's put into education, Southeast Asia does have quite a lot of tech founders who are females. So in Fund 3, we realized that we have done quite a few more. And in Fund 4, we just did a recent count. $305 million worth of investments poured into 14 investments that are backed by, with women co-founders. So in total, you're talking about more than, 40% or so of investments that has a women co-founder behind it. And we continue to look at that opportunity. Nice. Not because, and I've got one there, not because we were deliberate in looking for females, but we were looking for the best business, and it happened to have females as co-founders. Yeah.
Nothing to add. So Silicon Valley model, I think we kind of morphed it, right? I'm not sure whether you're asking on the investor side or the startup side, but investor side, yeah, we have morphed it. So we tried, and then we kind of assimilate with what's happening. Yeah. Because the Silicon Valley model is very simple, right? You have to be 30 minutes drive from me, and you must have been affiliated with Stanford. That's it. Period. Done. End of story. Right? So we don't have it here, right? In fact, NUS in Singapore, right, computer science is the 4th most popular major in engineering, right? Understand? So Stanford is number 1, right? So it's a very different background. Gender lens, yeah, it's obviously, yeah, it's been changing. So I think whether it's for-profit startups or social or impact, I think things are getting better. So yeah.
Okay, I got one question on M&A. So do we expect to see more M&As happening this year? Is it, are corporates now, is it finally the right time for corporates to start acquiring? Because, at least the valuations are a bit more dampened. So should corporates be doing that if there are corporates in the room? Or should startups be merging and consolidating, right? Do you think maybe more Series B companies should come together or more Series A companies should merge together? What are your view on the M&A landscape, right?
Yeah. So it's the survival of the fittest, right? So once when we realize that our days are numbered, we will probably want to find a home for whatever that we have developed previously, and so that there's continuity. But actually, there's a slide that I have, and I'll be happy to share after the event, which shows that most of our exits are actually via trade sale, if not secondary sale. IPO is just a small sliver of the exit opportunities. So for sure, as investors, we will see that going forward, there will still be a good number of our companies that will exit via M&A. So is this the right time? Every time, good time, bad time, is always a good time for M&A discussions. Yeah.
M&A happen probably after Q2 next year. So there's a lot more money last year and 2020, right? So there's a ton of companies that are too big to fail, and then a ton of companies that can raise money, right? So they will delay any strategic initiatives till next year.
So Q2 next year, yeah. Is when will start happening, yeah. Is it? Yeah. Okay, so companies that want to get acquired should probably start that process if they...
In fact, they should start now if you want, right? But most founders think they are 1%, right? So then they are like, yeah, I can do this, right?
Okay, any final questions from the audience?
No.
If not, then I'll go through my last 2 questions. Where? Oh, yes, the one at the back, please.
Hi there. So my question revolves around Web3. A lot of the inflow coming in from investments into Southeast Asian companies tend to be from the Western countries. In Malaysia, seems that there only seems to be one VC that's actively investing into Web3 companies. Starts with a G, not Golden Gate. So my question here is, why is this not within the fund thesis of Malaysian VCs? And number two, why not use, or rather, why not use the Western investments as an exit strategy for you?
Sorry, but I'm not Malaysian VC, but we do look at Web3. In time to come, when there's a right opportunity, we will not say no. Yeah.
Oh, so Web3 by default, you're global from day one, right? So if you can raise money from certain type of people, in fact, the Web3 founders who know what they're doing, they probably don't want money from me, right? So if you can raise, you raise from the best in the world because you are global from day one, right? So it's the same thing. So I think if you are doing good stuff, you should be fine. There's still money for Web3, maybe a little bit dampened, but there's still money.
Okay, great. That's just nice, the screen turn rate. Please join me in thanking the panelists for the very insightful answers. And thanks for all the great questions.
Thank you, Mohan, and all the panelists. Remember, founders, it all comes down to how logical and ambitious you are. And afternoons post-lunch is usually the most difficult time to keep our minds focused. But you know what? Kudos to all of you because you guys were so focused in the earlier session. But if you're feeling a little groggy, feel free to grab a coffee in between your sessions. But ladies and gentlemen, please grab a coffee and come back in here. Do not network just yet because we do have networking sessions that will be after at the end of today's agenda. All right, now, groundbreaking tools and technology initiatives were developed